So, what is a moving average? Well, it's exactly what it sounds like. It is the average movement of price on a particular currency pair or asset based on a certain number of candles. So, for the example we have on the screen now, the line that you see on the chart that's red is the moving average, and it is a 20-period moving average. The reason it's 20 periods is because we have the length or look back period set to 20. We have the source set to close. And what this means is that the moving average itself is going to look at the close of the last 20 candles. Red candles, green candles, does not matter. It's looking at the close of the last 20 candles, and it's going to add all of them together. Once it adds all of them together, it's then going to divide that number by 20 to give us the average of price, and that is how this line itself is plotted. So, to make this extremely easy, what I'm going to do is change this to a 5-period moving average, and we're going to do this calculation ourselves. So, with a 5-period moving average, you can see that our current indicator value is 1.21223. And the way you can see that is right here where it says MA that I'm pointing at now. So what I'm going to do is calculate by adding the last 5 candle closes. Each of these is the close of one of the previous 5 candles. And then I'm going to divide that number by 5. And this is the number we will see afterwards. Let's do that right now. So if we add all of those numbers together, we have 6.06114. And if we divide that by our 5 candles, we end up with nearly exactly 1.21223. Yes, we have 228 here, but the indicator rounded it up by 1 decimal point, which is totally fine. And that, my friends, is exactly how a moving average is calculated no matter what the number is. So for our last example here, if we had a 50-day moving average here, what would the indicator be doing? This indicator itself set to a 50-period length, whatever you want to call it, would look back at the last 50 candle closes and then would divide that number by 50, and that is exactly how you would get this line. No matter what the number is for your length, that is exactly how it's calculated. So that was what a simple moving average is. Throughout this course, we will be using something called an exponential moving average, but it works in a very similar way, and you'll see that labeled as EMA for exponential moving average. You can see that right up here in the top left of my screen. Again, works in a very similar way by looking at a certain number of candles and calculating the average price of those candles. So what you'll see is that I have an EMA set to a period or a length of 50 on my chart now. In order to get that, it is super simple. You go up to indicators. We've already talked about this a little, but just in case you missed it, you type in EMA and you find moving average exponential in built-ins. Click that and it will plot one of these on your chart. So now that we have it plotted on the chart, it's this blue one here. You would double click it, go here, click 50, and you can change the style to this to whatever you would like in the customization here. Now, throughout this course, we will be using 2 different moving averages. For the most part, it will be the 50 or the 20-period moving average. The way we're going to be using moving averages throughout the course is, for number 1, to find the trend of a market. So the easiest way that we're going to be doing this is by looking at the moving average and comparing it to price. If price is trading below the moving average, then we're going to consider that to be in a downtrend. If price is trading above the moving average, we're going to consider that to be in an uptrend. And the reason we're doing this is to have that objective rule for trend. This way, for beginners, if you're not accustomed to spotting out swing lows and swing highs and finding that we're getting lower lows and lower highs throughout a process of trend, this way we have a completely objective rule using the moving average, so that if price is trading below the moving average, we all know that's in a downtrend. There is no subjectivity there. And if price is trading above a moving average, we all know that's going to be an uptrend for the strategies we're going to learn in the Strategy Mastery course, and there's no subjectivity there at all. That's the first way we're going to be using moving averages. The second way is as areas of value, similar to how we were talking about using support and resistance. Oftentimes on these two, the 50 and the 20-period moving average, we will see price bounce off that moving average and start heading higher if price is trading above that moving average, or bounce off that moving average and start trading lower if price is below that moving average. So that is the second way we will be using the moving average as an area of value similar to support and resistance. We're also going to use the moving average in a couple of different strategies to help us spot reversals. Let me give you a scenario. So we can see here, price is trending down. What we may want to wait for is the cross of the 50 or the 20 period moving average to signify that we could see a reversal. Then we may want to wait for that pullback in order to capture that reversal off of the 50 period or the 20 period moving average. In the same way, when we have been trending up, creating new higher lows and higher highs, price trading above the 50 period moving average, we may say, okay, well, I'm going to wait until we get a push below the 50 period moving average, then wait on a pullback and a specific candlestick pattern to get involved on what I think could be a reversal trade because of the fact that we broke through this moving average. So that's how we may use moving averages throughout the rest of this course in strategies in order to trade reversal strategies. And the last and final way we will be using moving averages is at some point in a later lesson in the more advanced stages of the course, we will be using moving averages to do something called trail our stop loss. So trailing stop losses are when you do not have a specific place that you're going to place a stop, but instead you let your stop loss run with a moving average or the ATR of the current asset that you're on in a lot of different ways and a lot of different things that we'll talk about later on in the course in terms of trailing stops. But one important thing for you to know right now is that is one of the uses we have for moving averages, is to use them as trailing stops. So that's what moving averages are. That's how we're going to be using them throughout this course. Up next, we're going to talk about one other indicator that we're going to be using for strategies. Then we're going to move on to entry patterns like candlestick entries and different chart patterns we can use in combination with everything you've learned about technical analysis so far to actually enter the market. So up next, we're going one more indicator, then we're moving on to entry reasons. I'll see you guys in those videos. Talk soon.